I'm Shay Russell for mining.com.au, and it is that time of the week where we talk to Mr. Data Dan. How are you?
I'm very well, Shay. It's almost we're at the end of February, so it's now where pre-season's over. We're about to get into it. Uh, there's a very good story for the sector, conceivably, if you believe the bullish overtones. But it really feels like we're all back to work now. So very good.
Unfortunately, it does feel like we are all back to work. Summer days are drawing to a close here in Australia, but that does mean that the mining sector is almost going to be in full swing in Australia as we have less weather issues to work for. But before, we've got a couple of things we want to talk about, but I want to draw everybody's attention to an article you wrote earlier in the week. Great headline, by the way. Let's start with this: not living up to potential, a killer for resource companies. Now, Dan, I'm going to give everybody access to the link in today's video, but tell me, what prompted you to write this article?
Just like the thing which prompted me is really the cash rate decision, but also the investment environment. We've almost gone back to that period in the 1980s where a lot of people poured into resources, and when the potential of these super projects didn't materialize, losses were significant. And what that was really a case was that many of these businesses, some were very good, some were not so great, but the potential story was overriding you know, the the actual. And then in the last decade, we've had such record low interest rates that one of the hardest things for investors is to be able to see a return on their money. And so in the last 5 years, where we didn't have where we didn't have these big cash rate increases, like money was very cheap. It was actually like it wouldn't earn much in a bank account. So investors were prepared to park the said capital in another investment, which obviously observed higher risk. But after 2 or 3 years, when the money doesn't come in or there's no share price appreciation, that tends to augur not too well. And so we had this situation, particularly in the last 12 months, where people said, oh, I'll just put my money in the bank, at least I'll get something for it. But what they went to was assets such as property and blue chip stocks. Now they've performed spectacularly well. In fact, the US index is up 30% in the 12 months to December. You look at property prices here in Australia, that's also been a very strong move, double-digit gains across the capitals. So investors went to where they could actually get a return. They got a very handsome return just by going through very plain and boring and a lower risk. So the column was essentially about saying that if resources companies, especially explorers, are going to tell the story, they need to tell a compelling one about the path to return. And normally, instead of just saying the potential of this is blue sky, because investors have come to loathe that phrase, and that's what the genesis of that column was about.
As I said, I will include a link for everybody to read that article. It was a really good look back at what has happened and how to try and avoid that in the future. I'm going to pull on a little thread of something you just said in there, and it all started from the RBA. Now, the Reserve Bank of Australia did cut rates, was it last week?
They did last week, yes, yeah, last week.
Now, one of the takes from commentary around the RBA was this was essentially undoing one of the last rate hikes, and perhaps that there won't be any more rate cuts ahead in this year. Dan, do you sort of have any view on that or any data to drive an opinion on this?
I think it's sad seeing the central bank clearly verbaled. That's basically what it was. That most recent rate cut was politicized. It was obvious it was politicized. There were mortgage brokers with unionists protesting outside the central bank to lower the cash rate by 25 bips. It's just embarrassing. It's an embarrassing optic, especially for the independence of the central bank. The treasurer, Jim Chalmers, his rhetoric has been, instead of defending the independence of the bank, that is something all politicians, no matter what the stripe, should be very mindful of doing, because it's clear and obvious that the Treasury officials that are connected to the board of the RBA have had a voice, and it's clear that the RBA, I think, has been verbaled. That's just my opinion. But it's a terrible look for the independence of the central bank. The RBA, up until really 2020, enjoyed a reputation for being one of the best, well-run banks in the world. They then got into this ridiculous thing of providing commentary and a press conference afterwards, like justifying why they raised rates or lowered rates or kept rates on hold. I mean, these are people, genuinely who've got brains like planets, and they're being asked, questions by Neanderthals who know nothing about uh, the confluence of all the factors which go into policy setting, and also, for that matter, the lending and the financial structures which also flow into the domestic banking. There's a reason Australia's got a very good banking system. It's also one of the most profitable ones, and it's because we've got a very good central bank. But to watch it being verbal, to have people protesting outside the central bank, ridiculous. And it's just, again, but the bank made that as an own goal when they said interest rates would be on hold to 2024. Now, Michelle Bullock was also part of that leadership team when Philip Lowe said that. But again, just I think sad for the independence of the Reserve Bank of Australia. It should not be a political football.
Ask and you delivered. I had no idea that was going to be the answer, and I absolutely loved it because I do agree wholeheartedly that one of the things that people should be after is that separation between church and state when it comes to government and a central bank. And you're right, that decision in February has made a mockery of what was the independence of the RBA. Now, while I've got your eyes on Data Dan, let's talk about construction numbers. Now, many, many moons ago in another life of mine, I did keep an eye on construction data to just gauge the health of the Australian economy, because it's all we're good at doing, digging holes and then putting things on top of soil, big buildings. Tell me, what did this data reveal when it came out this week?
Well, an interesting side note, really, and there's the construction work data, which is now like it's about $73 billion for the quarter. That's in the engineering space, but the actual building in terms of resi, that's just marginally up, just less than 1%. But it's actually the engineering. So this is like the big bulk projects, highways, new stadiums, new buildings. Australia is actually going through a bit of a rebuild phase of its own infrastructure needs at the more public level. So that's really been the big key takeaway, is that the availability of workers now tend to be going to the large, bigger scale projects. And again, that's been driven really by the public sector, so government, not so much the private sector. Now, I had an on the sidelines chat to one property developer for my sins during the week, and one of those comments which came about saying he said it was very, very difficult to do the projects because of the cost factor. So remember, the construction work done is a measurement of money in dollars, and it's not particularly going up at big clips, but it's still going up. It's very hard to get a track, let's say, on volume, and volume is really about the widgets moving. But we're seeing that in the residential space, we're just not constructing enough, and that's really because the greenfield sites for property tend to be clustered around metropolitan capitals, which now we've got three gigantic mega regions. And for a country with a lot of land, again, it'll be an interesting election topic if we actually do decide to say, do we need to actually build some cities outside the existing cities? Because that's probably where it's starting to get to in terms of Australia, that infill requirements becoming very, very tough. So the construction work which we're seeing here in Australia is very interesting, but in America it's actually very interesting as well, because they've got a major rebuild going on in their bridges and ports, and that was happening under Biden and before that Trump as well. So you've got these Western countries, for example, that will need steel, and so that was interesting when we're talking about tariffs recently. That I wonder whether or not there's going to be some own goals, because in the US they've actually got a deficit of the steel required to rebuild their bridges and roads, and they're and certain cities on the west coast which have been basically obliterated by fire.
Yes.
That rebuild is significant. So, like so much now, the engineering construction activity really is about rebuilding existing items and structures. And so, while it's growing, it's also tending to mask some of the cost inputs, which is really around labor and materials. And so, uh, a positive number, but again, a murky one in terms of, I think what we really need. So that's kind of where we landed with that. But as I said, a positive's a positive, but it's a very meek and moderate line of growth, 1.2% overall.
It's not a positive that says the Australian economy is in rude good health.
No, we're just not doing. We're just not developing. Our industries tend to be like with the industry of government now. You got depending on which statistics you look at, 1 in 4, 1 in 5 workers around the country, and remember that are working in the working for government, so they're not actually working in the private sector.
And finally, to bring us home, February has drawn to a close, or it will be by the time this video is released. We've survived 1 month and a bit of the Trump presidency, but going into March, what are you looking for? Is it data? Is it macro? What have you got your eye on? Because the everything's back up and running now.
Everything's back up and running. I think I'm actually, for once, I'm not looking at the data. Actually, I will look at the data. I'll look at the oil price at the moment. I'm
Mm.
looking at the oil price with a view to whether or not the peace in the Middle East holds, whether or not, and this will probably cement, I think, if Donald Trump uh, and Zelensky agree a deal in the Ukraine with Russia, uh, that the world and Europe especially will accept, then I think that's going to augur very well in terms of sentiment for the next 12 months. So the medium term gain, the potential for that is actually quite significant. I'd be loath to put a number in terms of growth and all that, but people, investors, countries, political leadership love certainty. So there's obviously the dynamic in the Ukraine. The second dynamic really is basically whether or not the Australian election touted to be announced in the coming week will actually excite us. We're pretty nonplussed about an election in Australia, which I find extraordinary. So this is kind of so that, like they're the big things, and you know beyond that, it'll be, the oil price will be kind of a bit of a bellwether, if you like, of how sentiment's tracking. But the other thing which we probably need to start to assess is whether, what next in terms of the geopolitical environment. I think obviously peace in Eastern Europe and the Middle East will then turn the attention back to what's happening with the Chinese and their war games in Australian territorial waters or the exclusive economic zone. So it's a yeah, may you live in interesting times is the proverb.
Oh, it is. And look, I'm not going to lie, Dan. February is probably newsworthy wise the longest month of my life, and it has the least days of the least days out of all the months in the year. And honestly, I every day I'd wake up, there was just so much news to absorb. Listen, I'm going to round it out. Obviously, you've touched on geopolitics, and I think this is where we can leave today's conversation. You've touched on geopolitics. We've talked about Trump and his tariffs. Do you have any views on what's going to happen with the Australian election this year? You've been quite sort of forward looking with things that are impacting the Australian economy.
Sure.
It's due to be called any minute now. We've got to have an election in the next 8 weeks. Do you have any sort of crystal ball on what's going to drive it this year?
Shah, I actually think it's going to be. I think we're taking our cues from America, um, and this is just my take on. I wish I'd seen the Trump podcaster tech bro alliance way back before I did. But the canary in the
Mm,
coal mine in that case was when he walked into UFC, whatever it was, 35 or whatever, and people were chanting USA. Um, this is obviously not in the mining realm, but I think this is the election. And not that I've got any view on this, but I think this is the election where the men in Western democracies are almost the backlash against what they see as progressive policies around diversity, equity, and inclusion, rightly or wrongly. But there is a backlash there which progressive political parties simply do not know how to counter. And we've seen that in Germany over the weekend. We've seen that in the United States. That's obviously a thematic which I think is feeding into the Canadian election, which is due in October.
mm-hmm.
And so you have a lot of very, very angry men who feel that for whatever reason, and I think it's mainly because that they're not heard, or there's uh, that they've fallen victim to a narrative that that they're collateral damage and in the progressive side of politics movement, and that they've been categorized as monsters. Now, JD Vance, the US Vice President, said this very line at the most recent, when he was in Europe addressing leaders there. Now, that has, unsurprisingly, on the Rogan style podcast, has gone like wildfire. So I think this is the election of men, for want of a better description. I understand narratives around being good human, but the sad thing is that there'll be many good people in the who are centrists who will basically be you know I think caught up in a bit of a backlash against what I would call maybe progressive overreach, rightly or wrongly.
Interesting. I love the connection that you've made to the podcast era defining politics, because that's very much what we were in. Listen, Dan, as usual, never enough time. I look forward to next week's chat. This was awesome. Thank you so much for being here today.
No worries, pleasure.